gentlemen, good evening. It is the 26th of April, 2017. This is Christopher Aaron. I am honored that you have chosen to spend a few moments of your time with me as we look at the focus of this channel, which is to have the most clear sense of what is actually happening in the precious metals markets right here and right now, to try to strip away a lot of the extremist rhetoric that appears on both sides of the spectrum and to actually look at the data as clearly as possible. So thank you once again for being with me. There's a signal that I have been monitoring in the gold market that I want to explain to you today in some depth. So we'll look at this in some depth when we get to it. We are going to focus on gold here primarily once again because gold is really leading at this point. Silver has been weak, and with the way that the patterns are setting up, I place the utmost importance on what happens with gold right now primarily, with the knowledge that silver will follow eventually when it is ready to do so. For right now, we are looking at gold that has come back from that recent high just above 1290, failing to eclipse that. Same group of long-term technical-oriented sellers have shown up once again. Wouldn't you know it? We'll put that into perspective in just a moment. And looking at silver, once again, acting weaker than gold over the short run. And all I can say about silver right now is it's within a range of between about 1675 on the low side and around 1850 to $19 on the high side, where this is just an oscillation. Except if you're a very short term, and by that I mean day trader, maybe a swing trader, these motions in silver mean really next to nothing for me. So that's why I'm not paying a whole lot of attention to this back and forth type of price action in silver. Let's turn to the charts here. Let's look at the gold chart first, just on the 1 year price level here. We were talking about this resistance point right here at 1290. I was saying this is the same level that these sellers have shown up all throughout 2016. We can see that on the night of the Trump reversal here, this spike just about getting to that line, and once again hitting that line here at 1290. And when you know it, these technical oriented sellers are just keeping gold in this downtrend. So we can have a fundamental view, which is that the precious metals are undervalued or that they may be moving higher over the long run. However, we have got to pay attention to these technical levels because this is really defining what is happening in gold right now. So at the current moment, there's a whole lot going on here on this chart. If you need, you can pause this chart and kind of examine everything here. I'm going to go over just a few of the major points. The big takeaway is you've got this converging pennant formation here, this triangular shape, as you can see, from the most recent significant lows, including this 2011 to 2017 downtrend. And this is converging, and we're now right here in the late April timeframe. And the definition of a convergence is that this must break at some point. The absolute apex of this pattern doesn't come till right here, the end of the year, beginning of 2018. But I'll tell you from experience, these things very rarely wait until the very end of a pattern to break. You typically have a break happen at some point in the months preceding the actual apex. So I'm giving my best assessment here of what the scenarios are looking forward. Very short run, it's very tough to call. You've got this minor support here at 1260, 1265. This is the level that acted as resistance on a number of occasions back in February, March, and April, early April. So we would expect buyers to show up here. However, this is just a minor support level. So you could very easily see a continuation of the decline in gold, basically to anywhere within this region here, 1180 to 1200 acting as a support region. You could even see gold fall all the way back down here into June around 1170, and nothing would be violated from a technical basis. So the other scenario here is that gold just fools everyone and breaks this pattern sooner than possible, sooner than we previously would be expecting to be possible. So right now, it's just tough to call in the short run. I would say pay attention to this chart formation if you are invested in anything relating to gold or silver or the mining equities, because basically everything is queuing off of this right now. Now, the signal that I'm looking at, and you can say, well, okay, so we don't know in which direction this is going to break. We don't know yet, based on that pattern, if it's going to break higher or lower. So a lot of what my work right now is geared toward, this is a lot of what goes to premium subscribers every week. We're looking at various signals that are giving us early clues. And I want to take you through one of these clues, one of these leading signals early. This is giving us an early indicator of what we may expect from that last part of the gold chart, which we were looking at. It was right here, just for reference. But I want to get rid of that because this is the most clear way for you to understand this signal that I'm looking at. So what are the big picture items here? Of course, this is the downtrend we were talking about. This is the rising trend that we were talking about. This is very clear here, this apex formation, that we need to break above this long-term downtrend with authority, without any sort of false, one-day breakouts, and break this with authority for the gold market to really change this trend here. So you've got an indecision that is forming right here in gold. Now, the reason why this is important is because when this pattern breaks, if this pattern breaks to the upside, I am expecting a move that is at least equal to the amplitude of this original surge off the bottom. If that breaks higher, I'm looking at a move into the low to mid 1500s. And I'm not talking about 5 years from now. I'm talking about within the next 12 months. Conversely, because we cannot say yet that this is definitively going to happen, but conversely, if this pattern breaks lower, I will be looking for a target in gold of around $875 an ounce. And this would be absolutely devastating for the larger part of the gold mining sector. This would be devastating for many people who just became interested in the upper regions of this surge here, because you'd be looking at a move significantly lower that would then probably take another year or two to base before once again attempting to move higher. So I'm not saying that this move lower is going to happen or the move higher is going to happen yet. I'm laying out the possibilities based on this pattern. This is an inherently neutral pattern, this pennant-shaped pattern that we see in the gold market right now. And we have to take it as that. It's neutral. So therefore, we have to look at leading signals. What is a leading signal? It is something that gives us a clue ahead of time of what we may expect. And this is how I am aligning my thesis. This is why I am favoring the outcome for higher right now, but I can't be 100% sure. Let's look at it. So what are we talking about here? On the bottom, here's the leading signal. We're talking about a ratio. This is gold versus the CRB commodity index. What is the CRB commodity index? This is an index of 19 different commodities. It's an average price of 19 different commodities. It includes gold and silver, the rest of the precious metals. This also includes platinum, palladium, copper, industrial metals, aluminum, zinc, lead. This includes energy, liquid energy, Brent crude, West Texas intermediate crude, natural gas. This includes agricultural commodities. The point of this is what we're looking at down here is a ratio. This is the value of gold relative to the entire rest of the commodity index. So the significance of this, okay, is, for example, when you see a line that's moving sideways as we saw here from 2000 to 2006, even really into 2007 here, when you see a line that's moving sideways in this ratio, even while the price of gold was rising, what this is telling you is that nothing special is happening to the price of gold. It's telling you that because the ratio is staying flat, gold is just getting its headwind from the rest of the commodity complex. So the rest of the commodities were moving higher, and therefore gold was moving higher. That's what accounted for the first several $100s of the long-term low in the price of gold here back in the early 2000s. Now something changed right here. What happened? Look at this red circle here. What are we seeing? We're seeing the price of gold relative to the rest of the commodity complex making a significant breakout in the ratio. This is very clear to see. Whereas you had a relatively flat line, a beginning of a slight increase here, 2007, 2008, you saw a major breakout in this ratio in late 2008 in favor of gold. Now here's the ironic part. When did this happen? Look up. The breakout in favor of gold on a relative basis happened at a low in the gold price. This was the crash of 2008. Everyone was throwing everything out the window. People were literally jumping out of windows, unfortunately, getting their priorities a little bit mixed up. If you ever are considering that because of losses in the financial markets, I think your priorities are mixed up. There's a lot more to be excited about here in life and what we are living through than just the financial markets. That said, this breakout in the ratio happened as gold was collapsing with everything else in 2008. So that's significant. So what does this mean? As investors were selling every commodity under the sun, other investors were accumulating gold into the lows. So gold shot up on a relative performance basis even as the absolute price fell in 2008. Now there was a downtrend that formed here, and the reason this is such a significant signal is because when you see a breakout on a relative ratio happening as a price is falling, it's telling you something underneath the surface, behind the scenes, is happening here. Big entities are accumulating gold even as everyone else throws it out of the window. So what was the result of this signal? After this downtrend here, which mind you at this time was an all-time high, just around $1,000 an ounce, and you had multiple hits right here, here again at 965, here again at 935, and here again at 875. Multiple hits. After this breakout occurred of this downtrend from an all-time high, you had nothing less than a major advance for the next 2.5 years. And you had some of these mining companies which had crashed. I was making a lot of investments in this low here back in 2008. And you had a lot of these companies rise 500 or 1,000 or even 2,000% in some instances during this rise in gold from around 900 to 1,900. So once again, breaking out of the ratio even as the price is falling into a major low. That was the signal. Where else have we seen this signal? Only one other time in the history of gold trading since the year 2000. That happens to have been at the lows here in late 2015, early 2016. You can very clearly see after this surge in the ratio of gold versus the CRB commodity index, basically everything moved flat. So what that was telling you is this move and then the decline after this surge here was all related to broad commodity action. Commodities moved higher and commodities moved lower, and gold did that as well. This same signal has just once again broken out in favor of gold. You can very clearly see the ratio that was hit here in 2011, 2012, early 2015 was broken here decisively. Okay, we're not talking about a little bump here that gets smashed back down. We're talking about a decisive breakout as the price of gold is falling. It's the exact same signal that we had here back in 2008. And once again, this signal happened at a major low, and then we've seen a couple additional attempts to break the downtrend, very similar to these attempts to break the downtrend here in 2008. So something was happening. What this is telling you here is something was happening in the gold market at this low that was causing investors to accumulate a significant amount of gold, even as the rest of the commodities were falling. Gold is sometimes grouped into the rest of the commodity complex, and sometimes gold is a distinct entity. And we're seeing here evidence that gold was being accumulated irrespective of its inclusion in the CRB commodity index. Now, once again, the only other time that we've had this signal was in the crash of 2008 at a major low. You had another major low here. You are still within the downtrend. I am aligning myself based on the research that I have done. I am aligning myself with the expectation that just as we saw here in 2008, after this major signal, the next thing to happen is a break above this falling downtrend, which we're waiting for here. This is the best of the analysis that I'm capable of providing based on this signal, which is one of 4 or 5 distinct early warning signals that we are monitoring here at any one time. But I just wanted to do a bit of an in-depth analysis on this signal specifically so you can understand why I think the move that is setting up either imminently or at the very latest within the last several months of this year is going to be quite significant. Now, is this 100%? No, of course, nothing is 100% in life. But if you are interested in this type of analysis and are interested in aligning yourself to prepare for this move that my best analysis shows will be moving to the upside, I would like to welcome you to join the premium service. That is how we are preparing to capture this move when it arises. You can find more on the website. If you have an individual situation, you don't care to subscribe, but you want someone to help plan or strategize for your particular situation, please know that I do work with individuals on a one-on-one basis. Again, I take no funds from any of the stocks or any of the mutual funds that I research or discuss. I am solely aligned to helping individuals, and I am very glad that you have chosen to spend these few minutes learning some of these signals with me and understanding this, because I do think that when we look back at this time, not too long from now, I mean 18 months, 24 months from now, we will be saying, wow, wasn't that an opportunity? So thank you once again, and the next update will be a week from today as we continue to navigate these markets.